Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, we are very pleased you have joined us for our next live presentation from Osisko Metals Inc. Please note, you can submit your questions in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Robert Wares, Chairman and CEO of Osisko Metals, which trades on OTCQX Best Market under the symbol OMZNF and also on the TSXV under the symbol OM. Welcome, Robert.
Thank you very much, Eric, and welcome everyone. Thank you for joining us today. To help present the company Osisko Metals, we're one of Canada's leading critical metal developers, copper zinc specifically, with two projects located both in Canada and brownfield sites. Forward-looking statements, which I will not read. Before I get into our project description, just a few words about the state of critical metals or base metals globally and our outlook on what is going to happen in the next few years within the framework of global decarbonization. So first slide, this was published by Glencore about 3 years ago, what their view was and is on metal consumption and demand and the impact decarbonization is going to have. When I say decarbonization, of course, I'm talking about the 2050 net zero emissions, which was the Paris Accord to limit global warming by 1.5 degrees centigrade. It's a climate model. Most countries have adopted it, but the impact on metals is dramatic. Glencore estimated that if this is going to happen, we basically need to double our copper production by 2050. We need to double our global zinc production. Copper and zinc go mostly into infrastructure related consumption related to renewable energy and divorcing ourselves essentially from fossil fuels. Nickel cobalt demand will be dramatic. We're talking about almost quadrupling the production. That assumes that lithium ion batteries technology will not change, with the favored lithium-ion battery being the nickel manganese cobalt model. But that could be displaced by technology, but you can displace infrastructure. You can displace the need for copper in wiring, for example, and electric motors. Demand for copper is ubiquitous no matter what alternative form of energy you choose, whether it's nuclear, solar, or onshore wind, offshore wind. Remind you also that for grid storage and alternative renewable energy sources such as solar and wind, that consumes about 3.5 tons of copper for every megawatt of stored energy. And of course, if we're going to decarbonize our electric vehicles, the average electric vehicles use 2 to 3 times more copper than a conventional vehicle. We're talking about an average of about 8 tons of copper per 100 vehicles on average. So copper is the critical metal. Without copper, nothing else happens. The reality of copper is that we have been living a discovery drought in terms of new deposits, new mineral discoveries since about 2010. This is global. The rate of success of discovery of major new deposits has been continuous downfall, despite the fact that you have very healthy annual budgets devoted to exploration in essentially in billions of dollars, about 2 to 2.5 billion a year, and that's because major deposits are becoming more and more difficult to find in the deeper setting in areas of higher jurisdictional risk. Net result of lack of new deposits going to production is that the production added copper to the global production curve has been flat and declining since about 2015. The other element that's not helping in terms of uh, putting new copper deposits into production is what's called incentivization bar. That's the spot copper price that's needed to incentivize most developers to bring their deposits into production. And that has been largely negative, especially since about 2013. I'm referring to the yellow line here with respect to the spot copper price, which is the black line. So we've been in, and this is affected by the global spot price. The reason the global spot price is below the incentivization price is largely because spot price more and more is controlled by traders and short-term objectives in terms of swing trading commodities to make a buck, and the supply demand fundamentals are having less and less of an effect on commodity prices globally. So that is resulting in higher volatility and higher instability in the spot price, which is destructive in terms of long term requirements needed to put new deposits into production. As we head into 2024, and this is data from S&P Global Market Intelligence, we're going to need about 450 US a pound copper for most global copper projects to reach production. This is obviously not happening. Copper is still sitting in the 360, 370 range right now. So if nothing changes, we're headed for a global production deficit starting in about 2025. That should result in much higher copper prices, but it's not going to solve the problem. Even the price of copper went up to $10 a pound. There's always a time lag, especially permitting wise, to put new copper deposits into production. So the deficit, which we're projecting in 2025, is going to last several years until new deposits come into production. So the need to accelerate the whole process globally for new deposits is actually critical. No pun intended. Otherwise, we're going to see deficits for most critical minerals. So back to our projects. Map of Canada. Our copper projects located in Eastern Canada and Quebec. Our zinc lead project, Pine Point, is located in Northwest Territories. Both of these are past producers. Pine Point closed in 1988. Gaspé Copper closed in 1999. Most of these deposits still have significant resources, and they closed back in the 80s and 90s due to low base metal prices. The situation's obviously changed since then. We'll focus now on Gaspé Copper first. Past producer, as I mentioned, with road access to deepwater ports about 60 miles away. The town of Murdochville still exists. Power and roads still exist on site. So it's critical, very important when you consider investment in a base metal project to ensure that it is located near infrastructure. Metal projects located in the middle of nowhere, unless they're gigantic world-class deposits, have essentially no chance of going into production. This is the Gaspé Copper site operated by Noranda until 1999. I actually had the pleasure of working there. Back in the early 90s, it had its own smelter, 10,000 ton a day mill, and support infrastructure and buildings. It was one of the largest underground mines in Canada in its time, bulk tonnage room and pillar underground operations with pillars up to 120 feet high. It was actually a spectacular underground operation with over 100 miles of underground development. Again, its own smelter and its own open pit operation, but the bulk of the production came from underground operations. Town of Murdochville still sits there today. Population about 650. In its heyday, it had almost 5,000. It was obviously a mining town that's now survives on seasonal tourism. So the site itself, now owned by Glencore Canada, from whom we purchased the site, has been completely reclaimed. The former smelter is gone. The mill is gone. There's an existing water treatment plant. Garage administrative buildings are still there, but are in bad shape. We'll have to tear them down. So we completed the acquisition in July. We're now 100% owner of the site. And our objective, now that the smelter is gone, is simply a pit expansion of the Copper Mountain deposit. So Noranda in its day could not expand the Copper Mountain pit because the smelter was in the way. Now we have the free real estate available to expand this pit and hopefully restart this operation within the next 7 years. The reclamation, Glencore did a great job. The tailings pond to the south is now a green area, and the Copper Mountain pit contains clean water, no acid waste or acid influence or heavy metal contamination. So our plan is to reopen the mine again with an expanded pit. Here's the town of Murdochville seen from satellite view. The expanded pit would be along the green line. We have the waste dump to the north and the reclaimed tailings pond to the south. Most of our operation would reuse the existing infrastructure for both tailings and mine waste. So the current resource sits at about 456 million tons in the 0.31% copper. Our updated resource estimate will come out in Q1 next year. We're shooting for almost 500 million tons in the new resource estimate, running about 0.33 to 0.34% copper. There will also be moly and silver byproducts, bringing the copper equivalent to about 0.4 copper. So we have a solid resource in pit. Eventually, we're going to model the mine plan based on an optimized pit, which should run about 410 million tons, slightly higher grade with a lower strip ratio of about 1.2. So this is a solid project in a safe jurisdiction with existing infrastructure. We're extremely confident that we can go into production readily and that we'll get the permitting done without a reasonable time frame of about 4 to 5 years. So the acquisition from Glencore Canada was simple: issuance of a US $25 million convertible note into shares of Osisko at about 40 cents per unit, which includes a share and a half warrant. Milestone payment of US $20 million upon commercial production. Our commitment now is to spend Canadian $55 million over the next 4 to 5 years to bring a project shovel ready, which will include permits, IBAs or agreements with local communities, including Indigenous communities, and of course, bankable feasibility study. Glencore in the deal retains a commercially reasonable offtake for 100% of concentrates produced. That will include both copper and molybdenum. So the geology of the site is fairly simple: a gently folded sedimentary sequence. The Copper Mountain deposit located here near surface, associated with the usual calc-alkaline porphyry. So this is fairly standard porphyry copper deposit. The adjacent sedimentary horizons were host to higher grade underground copper skarn deposits. Total production was about 70 million tons of 1.5% copper from bulk tonnage underground operations. Copper Mountain Pit produced historically about 72 million tons of 0.37. And as I mentioned right now, on a larger operation, we're looking at about 500 million tons, about 0.33. And the actual resource estimate was based on a 0.16% copper cutoff. So we're talking about 3.1 billion tons in pit resource. 3.1 billion pounds in pit resource of copper metal, or about 1.4 million metric tons. So that makes Gaspé Copper a tier 2 copper asset, but I want to emphasize safe, stable jurisdiction with a reasonable permitting timeline. And quite frankly, I'd rather have a tier 2 copper asset that I know I can permit in the next 6 to 7 years in a safe jurisdiction than have a tier 1 asset in a unstable jurisdiction, which is part of the issue of many copper deposits right now that are undeveloped globally. So we've been drilling the deposit starting 22, completed program last summer in 23 for about 40,000 meters, so over 120,000 feet of drilling to convert the resource to measured and indicated. That is done. We had spectacular intersections. Our best one was hole 1005, over 1,000 meters, or in fact over 3,000 feet of 0.46 copper and 3.2 grams per ton silver. That included about 312 meters over 1,000 feet of 0.76 copper. So that hole was actually drilled in the heart of the deposit, starting on the southern margin and going over the higher grade core, which lies underneath the existing pit. So our enlarged pit that I mentioned, about close to 500 million tons, will reach a depth of 600 meters, almost 1,900 feet, and that will include the entirety of the high-grade core of the system. So the mineralization is fairly standard stockwork copper moly vein system, and including significant molybdenum. In the new resource estimate, we will produce molybdenum grades, and the skarn system underneath, which we will not access for now, was a fairly standard copper skarn. In terms of upside, there's another large porphyry system sitting the adjacent mountain. It's called Porphyry Mountain. It sits about 3,000 feet below surface. And right now, there's no resource on the stage, but we will start working on this deeper deposit, at least get an inferred resource on it in 2024. It's higher grade than the Copper Mountain. This is the list of past holes that have cut through the system, the best one being 2012, hit over 822 meters, so roughly 2,600 feet of 0.94 copper and 0.07 moly. So those are excellent grades, and we will return and have a serious look at this deeper deposit with the potential of being operated through an underground block caving operation. So our timeline right now, pretty much set in stone by the current regulatory environment in Quebec, is we're sitting right here right now. So we have closed the acquisition from Glencore. We've completed our definition drilling program of 40,000 meters, about 130,000 feet. Right now, we're entering this stage where we'll be doing further exploration drilling, especially Porphyry Mountain, but also launching feasibility studies and environmental and socioeconomic impact study with the objective of obtaining our permits by the end of 2028. So it's a 4-year timeline right now. And all permits as well, including feasibility. So at that point, we'll be at what we call final investment decision, or shovel ready, FID, which would lead to a 2-year construction, project financing and construction period. Right now, we estimate total capex on a 55,000 ton a day operation with a 23-year mine life, very preliminary, estimated capex of about 1.8 billion Canadian. So moving on to Pine Point, that's our secondary project right now, which is in joint venture with Appian Capital Advisory out of London. They are earning in a 60% interest on this project for an investment of about $100 million. So Osisko Metals is free carried on this project. One of the best zinc development stories right now in Canada. Again, a past producer, infrastructure in place. Again, the 60-mile ride to Railhead and Hay River. The project is located on the south shore of Great Slave Lake. Cominco, which is bought out by Teck in the 90s, early 90s, operated this for a better part of 20 years. Again, low-cost operator. It was all shallow open pit mining, and the infrastructure, original mine infrastructure, is still in place. So right now, in this project, we have about 16 million tons of 6% combined lead zinc in the measured and indicated category, inferred category, about 47 million tons, grading equivalent or similar grades. In our last PEA 2022, we had an NPV Canadian of about 600 million with an after-tax IRR 25%. So that was based on $1.37 long-term zinc. So Pine Point has potential to become one of the top 10 global zinc producers. And also, key point here, the zinc concentrate that will come out of Pine Point would be exceptionally high grade and high quality. This was the case when Cominco operated the mine. It's still the case today. Again, infrastructure is in place. So right now, our details of our deal with Appian is $75 million engagement, advancing the project FID with feasibility to start actually now, and includes 25 that includes a $25 million investment into Osisko Metals, into equity as well as cash payments. Back to concentrate cleanliness. Pine Point, this is the composition of Pine Point concentrate according to our own testing with respect to global producers for major elements, including silicon, iron, lead, and copper, and for trace elements, arsenic, cadmium, mercury, and manganese. Pine Point also beats the lot. When I say the lot, these are the 5 biggest zinc producers in the world. So this will be an exceptionally clean, high-grade concentrate running about almost 60% zinc. And the bottom line is that all the smelters in the world are going to want some of it. It'll be a highly marketable product due to its cleanliness. And we'll have the ability to, by rail, to export the concentrate to the main Canadian railway line with the objective of having access to both West Coast and East Coast sourcing for the smelter. Our agreement with the First Nations right now is going well. Our IBA frameworks are underway at Pine Point. And the objective, again, is to reach FID in 4 years. So considering a presence of infrastructure, critical mass of minimum 20 million tons of mineralization, Pine Point right now is standing about 60 million tons, and quality of concentrate, this is the only zinc project in the Americas that fits all 3 criteria. I'm trying to change slides here, and I'm afraid the system is jamming. Here we go. So 2023 objectives: close the acquisition, Gaspé Copper, done. Complete definition drill programs on both Pine Point and Gaspé Copper, done. And launch metallurgical testing at Gaspé Copper, that's done as well. As we head to 2024, we are going to release updated, measured, and indicated mineral resources on both Gaspé Copper and Pine Point in Q1. We will launch officially our feasibility study at Pine Point in Q1, and we will launch our PEA and environmental baselines at Gaspé Copper in Q2. We will also launch new exploration drilling programs on both projects, about 6,000 meters, 19,000 feet at Pine Point, and Gaspé Copper, slightly more Gaspé Copper in Q2 2024. So we're going to have a very busy year on both projects. Looking forward to advancing both, and what we believe will be a rising base metal price or critical metal price. Base prices have to improve for both zinc and copper for most global development projects to go ahead. So we are bullish on both metals. And as it stands, to quote Wood Mackenzie, right now, we have an almost unattainable gap between the green energy copper demand and mining supply. This has to change, and we firmly believe, especially as we roll into 2025, that base metal prices will increase significantly and have a very positive impact on base metal development stories. So that's the story right now for Osisko Metals. Again, about 8 billion pounds of resources at Pine Point, 3 billion at Gaspé Copper. So great development story in a stable jurisdiction. And at this point, I will address the questions that have come in. First question: why did Glencore divest of Gaspé Copper? Answer is, for Glencore, this was a tier 2 asset. Glencore had an EBITDA of $36 billion US last year. If Glencore is going to invest in a pure mining story, it would have to be a world-class deposit. So for a lot of secondary assets owned by Glencore at this point, they would rather JV and retain interest in the offtake and let the JV partner take it to FID. And Gaspé Copper at that point is the only type of agreement Glencore has ever signed with a junior Canadian developer. And it's going well right now. And of course, I do believe we'll be successful, which will open up new avenues for new deals with Glencore Canada. Next question. can you share your thoughts on the stock as being under so much pressure given all the accomplishments that Osisko Metals has achieved with Glencore? Basic answer: when we signed the Glean with Glencore, we did well. We up to 60 cents, but copper price was at 450 US. I also thought that we're on a roll and global copper price would remain certainly above $4. That did not happen. Again, it floundered in late 2022. It's been flat in 23. Right now, sitting about 360, 370. So bottom line is for base metal developers, we need higher base metal prices. I think it's going to happen. So bottom line, OM is a bet on base metals, especially copper at this point. And again, we are very bullish, and we expect rising base metal prices in 24, certainly in 25, and that'll have a positive impact on our share price long term. Next question: why will it take so long to go into production given it was a mine already? Common misconception with brownfield sites is that it's easy to get a permit. The answer is it is easier to get a permit because the environmental impact of a brownfield site and a reopening is far less significant than a greenfield site. But today you still have to go through the process, and it's the same process whether it's a greenfield site or a brownfield site. And that takes 4 to 5 years in Canada on average, which I have to say is much better than most other countries. But once you've gone through the process, given again that it's a brownfield site, the probability of getting your permit is vastly improved. Next questions. What are our thoughts on our evaluation, and what is the catalyst for reevaluation of Osisko Metals? Again, getting both projects to FID and a rising base metal prices will be the dominant catalysts over the next 12 to 24 months. So I think that is, we're almost out of time, and that is, I think, all we had on the Q&A chart. So I thank everyone for joining us. Feel free to contact us at info@osiskometals.com if you have any more questions. And I look forward to presenting again next year.